right, well, we'll get going. As a reminder, this event is being recorded and will be made available on the Social Work Grand Challenges website. So hello, everyone, and welcome. I'm Jenny Romick from the University of Washington in Seattle. I want to acknowledge that I am talking to you today from the traditional lands of the Duwamish people and on the shores of the Salish Sea, which touches the homelands of a number of nations in our area. And I'd like to acknowledge their tribal history and the continuation of their efforts to provide for their community. So I hope our work honors them today. You're welcome to note in the chat whose lands you are participating from today. So, and happy tax day, or at least happy traditional tax day. The official deadline this week or this year is Monday, but we chose to have a conversation about taxes and social justice on the conventional deadline of April 15th. So before we begin, I wanted to do a little housekeeping and also note a bit about our Grand Challenge. So with me as panelists are Laura Lane and Trina Shanks from the University of Michigan. Laura and Trina, there you're waving. They, along with me, are co-leads of the Social Work Grand Challenge on reducing extreme income inequality. We are one of 13 grand challenges, 13 big thorny problems that social workers are tackling and that the Academy of Social Work and Social Welfare has designated as challenges that we're taking a 10-year look on how the social work profession can address these issues. So you can learn more about us by following us on Twitter. We also have a Facebook account and a mailing list. You can look up on Twitter and find more on that, or Flo, perhaps. We've got Florence Alexander with us today, who helps coordinate this work. Flo, maybe you could put in the chat how folks can email to get on our mailing list as well. So today's webinar will run a little over an hour, I think. You're welcome to put questions in the Q&A function at any point, and we'll have a little time for questions and discussions at the end. Today's format will also include a couple of polls or quizzes, and I'll tell you why for that in a little bit. But I also wanted to say some thank yous. First, to the work and income work group of our Grand Challenge to reduce extreme economic inequality, and particularly to Alex Toulakis and Tulkas, I'm probably butchering her last name, and Cheryl Hyde, who are members of that work group, along with Dylan and Vince, who are with us today. Our Grand Challenge has two work groups, one focusing on work and income, and one focusing on assets and wealth. And these are smaller groups where we gather for networking and for planning some events. So you can, if you're interested in that, yes, inclusive asset building is the right name for the other one. Thanks, Trina. And I also thank you today to the University of Michigan School of Social Work Continuing Education. They are hosting this webinar for us. And they are also providing continuing education credits for those of you who pre-registered and are interested in that. I'm going to hand it over for a second to Aaliyah Wessela, who is their Director of Continuing Education, who can talk a bit more about the CEU process. Aaliyah.
Thank you, Jenny. So for anyone who's participating and would like continuing education today, you need to do two things. First of all, please plan to stay the entire time with us. We do check our attendance records for that. And then also participate in today's live polling that you will see popping up within Zoom on your screen. If you've never done this before, you should see a little pop-up when we do the poll. It should prompt you to respond to the poll. If for some reason this isn't working for you, sometimes various tablets, seems to mysteriously go away, doesn't work, please respond in the chat. We're happy to hear your response that way as well. After the session, for those who've met the attendance requirements, you will receive, usually within a business day or two from my office, an emailed evaluation form that we ask you to complete. And then after you complete the evaluation, you'll get a link to an electronic certificate from us. So that's the process. If a week goes by and you're like, I don't have an evaluation, please feel free to contact our office. I'll put our email in the chat so you have us as a resource there. And I also wanted to mention that I've activated the live transcript today, so you're welcome to toggle that on or off as best suits your needs and preference. That's kind of happening in the background over here. So I think that's it. If there's any questions about CE, I will monitor the chat for those. And otherwise, just plan to be here and participate with us today. And you should be good for CE hours. Thank you.
All right, great. And welcome to Alexis, who reminded me that her name is pronounced Sukalis. And for those of you who are interested in intending to apply for CE credits, Alexis co-authored or authored one of the supplemental readings that we'll be sending out. So, all right, thank you. And thank you again to Aaliyah and the University of Michigan Continuing Education Group. All right, and our first quiz is coming up now. So we're interested of those who are with us today, which best describes you?
All right, I'm going to end the poll.
Okay, students, practitioners, faculty members, pretty even split. Great, glad to have you with us. All right, so to give some perspective on why social workers should be thinking about tax and social justice issues, I am pleased to introduce a good colleague, Vincent Fusaro, from the Boston College School of Social Work. Vin is an assistant professor there. His research and teaching focuses on poverty, inequality, and social welfare practice. He holds a master's in social work with a concentration in macro practice, go macro, from Boston University, and earned his PhD in social work and political science from the University of Michigan, including writing a dissertation on TANF policy that won the SWIR 2018 Outstanding Dissertation Award. So Vincent is going to talk to us about how social policy, tax policy is something social workers should be paying attention to. All right, thanks, Vincent.
All right, thanks very much, Jenny. And you sort of did all my intro for me, so I think we can go right to the first slide. All right, so we know that social work has a long history of thinking about economic policy. You know, we can go back to folks like Edith Abbott and Frances Perkins and think about how they shaped the system of social welfare that we have, all the way up to folks like Jared Bernstein, who's a key advisor to President Biden now. So we have a history of looking at these things. And the NASW Code of Ethics leads us to think about economic policy. So think about two ethical principles in particular. So social workers' primary goal is to help people in need and address social problems. And social workers challenge social injustice, including issues of poverty, unemployment, and discrimination. So both of these things are going to lead us to think about the distribution of resources in society. And then that's going to lead us to think about economic policy. And social work research and education does talk about these things, but we tend to focus on tangible transfers like TANF benefits or SNAP benefits or services that are provided. I'm going to argue here that it's vital for us as social work researchers, practitioners, and students to think about tax policy for three key reasons. First, taxes fund a lot of the work we do. Second, tax policy is a major component of what we might call the hidden welfare state. And then third, tax policy gives us a key lever over economic inequality, and some tax policy designs can actually kind of exacerbate the harms of poverty. Next slide, Jenny. All right, so thinking about that first point, a lot of the work that we do as social work practitioners relies on the health of public budgets. And some of these things are going to be obvious, things like the social services block grant or the community development block grant. The government's directly providing money to provide services. Some of these things are less obvious, but think about some of the things that are important for social work clinicians. So something like reimbursement rates under Medicare and Medicaid is going to have tangible implications for whether they can do their work and how they can do their work. And then there are other public funding streams that affect our clients, but the health of those kinds of initiatives is going to influence our work. So think about what practice with older adults would look like if Social Security suddenly had to become less generous because of some funding shortfall. Right. Next slide. All right, so one of my favorite activities to do with my intro social policy students is ask them to think about what they think are the largest categories of spending in the federal budget. And I've been doing this for a few years, and almost inevitably, the category that comes up again and again is either national defense or the military, something like that. But if we look at how federal money is actually spent, so this is federal spending in 2019, 26% of that went to some kind of health insurance. So Medicaid, Medicare, CHIP, subsidies under the Affordable Care Act, things of that nature. Another 24% went to Social Security, and then another 8% to other parts of the safety net. So with those three slices combined, we're talking about over half of the federal budget going towards either health or social welfare kinds of spending, things that are really critical for social workers to be thinking about. Okay, so where do we get the money to fund this stuff from? Next slide, thanks, Jenny. It's folks like us, right? It's just regular folks for the most part. So this again is 2019, and I'm showing 2019 because 2020 and 2021 are really weird for obvious reasons. We look a little more like Sweden for a couple of years. Where did the money come from in 2019? So about half came from personal income tax. So what people typically think of when we think about tax policy in the US. And then another 36% came from payroll tax, which is the taxes that fund Medicare and Social Security. So those two things combined, for most of us, they're just kind of automatically being taken out of our paychecks. So the money to fund those things that we saw in the previous slide is coming from folks just like us and our clients. Right, next slide. And that's just the federal budget. So, we're in a federal system, so state and local budgets differ nationwide, both in how they spend their money and where they get that money from. But things like state fiscal health have profound implications for some of the policy areas we might be interested in, things that we've devolved to lower levels of government. Like think about how much control state and local governments have over education in the United States. So, a more robust system is going to be able to fund more services in education, things of that sort. Or, the health of state budgets is going to tell us something about how prepared they are to fund unemployment insurance when there's an economic downturn, things of that sort. Now, the federal government can pretty easily run deficits, but state and local governments often have requirements that they have to balance their budgets annually, right? So if they have to balance their budget, they're either going to have to raise revenue, that's the tax side, or they're going to have to cut spending. And if they make those decisions around cutting spending, in a lot of cases, that's going to be cutting things that might affect either us as social work professionals or our clients. So we have to look at the health, both of the revenue and the spending streams in these public budgets to really get a sense of the social welfare landscape. All right, next slide. All right, so the second point, tax policy is a key part of what we might call the hidden welfare state. So there are traditional redistributive kinds of programs we do through the tax system, things like the earned income tax credit and the child tax credit, but there's also this enormous sort of shadow system of welfare that lots of people don't think of as welfare at all. And what I mean by this is that our income tax system is filled with all kinds of credits and deductions and things like that for particular situations. And those are often trying to fulfill some kind of social purpose. So something like the mortgage interest deduction is trying to encourage home ownership. Deferring taxes on the contributions we make to our retirement plans is trying to foster long-term investment so that we're supported in our post-working years. Right, next slide. All right, so I called this a kind of welfare. Why did I do that? Well, let's think about doing policy via tax breaks versus doing policy via cash transfers. So let's say the federal government wants to encourage people to buy electric vehicles, and they consider two policy options. They can either send a $1,000 check to electric vehicle owners, or they can give a $1,000 tax break to electric vehicle owners. So what's different here, right? So if you really think about it at a mathematical level, just the basic math Either way, the consumer comes out with $1,000 more in their pocket and the government loses out on that $1,000, right? So at that base math level, tax breaks and cash transfers are the same thing. The only thing that really differs here is the delivery mechanism, how we get the benefit to folks. But society views those delivery mechanisms really differently. We stigmatize things like housing vouchers and celebrate things like mortgage tax breaks, but those two programs are really serving similar purposes, trying to make housing more affordable, but for different populations. And a lot of these hidden tax-based programs tend to benefit more affluent folks, and beneficiaries don't really see themselves as benefiting from a government program, even though, again, if we look at it just from a mathematical level, that's exactly what's going on here. And if we think about these things as spending programs, some of these programs are really big. So something like the mortgage interest deduction right now costs the federal government about $25 billion, which is roughly the same amount that goes to the housing choice voucher program. This was even bigger prior to the 2017 tax changes. It was worth about $60 billion at that point, which is more akin to like the SNAP program. All right, and then the third point is that tax policy gives us a lever over economic inequality. So we know, think about the name of this Grand Challenges group, extreme economic inequality has detrimental side effects. Things like progressive taxation, designing our tax system to place a larger burden on folks with more resources, is one lever we have to bring down inequality from the top, so shrink the rungs of the ladder from the top. And then some of those tax-based transfers like the earned income tax credit can build up at the bottom. So through tax policy, we can attenuate inequality from both directions. On the other hand, if we design tax policy in ways that are regressive, putting more burden at the bottom, or we tax basic necessities, we can actually make hardship even deeper. So just as some examples here, 13 states place a sales tax on groceries, and 3 of those, Alabama, Mississippi, and South Dakota, it's their full state sales tax rate. Most states with a sales tax apply it to clothing. Some have various exemptions, but for the most part, they're applying it to clothing. Now think about this. If I'm Bill Gates and I need some work clothes, and I go to the store and I buy some new work clothes, I'm probably not going to notice the extra few bucks of sales tax. It's not going to bother me at all. If I go to the store and buy some new work clothes, I might see it and grumble about it, but it's not going to hurt me in any big way. Well, what about a family that's in or near poverty and they need some new work clothes? Well, that extra few bucks.
I will go on. He was explaining how sales tax is very regressive. It collects the same percentage regardless of whether it's a very wealthy person buying something that's necessary. I put the example of diapers in the chat. Or whether it's a low-income person. I'll advance the slide here. Vincent, if you're back, you can weigh in. And if not, I will go on and say what I was going to put in the discussant chat, which is I think Vincent did a great job of overviewing why social workers need to be concerned about tax policy. As he notes in the slide, we often think of tax policy as a very technocratic issue. The idea of taxes kind of puts you in mind of accountants and more kind of number counting issues. But tax policy really matters for the well-being of individuals in society. It matters for how income and wealth are distributed. And it gives us a way to make people's lives better and to make our society as a whole better. So that's why we care about this and why we are holding a webinar on it today. So next. So thank you, Vincent. I'm sorry we lost you at the end, but that really was a nice overview there. Next, we're going to move on to hearing from some panelists about doing social work practice around tax policy. First, we're going to hear from Esther Tercius, who is the Deputy Director of the Colorado Fiscal Institute. CFI advocates for policies that promote equity and widespread prosperity for all Coloradans. She holds a master's in social work from the University of Denver and has a background in community organizing and outreach. She came to CFI through a great program, through their State Policy Fellow program. And maybe you can talk about that briefly for students who are thinking about doing policy practice. She then stayed on and took a permanent role on their staff and was named as their deputy director in 2021. And so we asked Esther to join us today and talk about CFI's work and her work doing state level tax advocacy. So Esther, take it away.
Thanks so much, Jenny. Can you hear me? I want to make sure my audio works. Awesome. Thank you for having me again. I'm really an honor to be with you all and great to be alongside so many social workers. My name is Esther Turcios, she, her, ella pronouns, Deputy Director, most new role for me at the Colorado Fiscal Institute. And as Jenny, as you said, we are a nonpartisan nonprofit organization. We use research and policy advocacy to advocate for sound fiscal and economic policies that promote equity and widespread economic prosperity. And, for us at CFI, we believe that tax policy really lies at the heart of the technical side of understanding taxes, right? So as we've said, what are progressive taxes? What are regressive taxes? What's a tax rate? Marginal taxes versus, other types of taxes, income inequality, and just in general, how taxes work. And then the value side, right? Our relationships with taxes, what taxes mean for us, what are our beliefs and value system around taxation and budgets and where we put our tax dollars and how we fund things. And how all that comes together to support our communities and create strong, thriving communities and a strong economy. Because really, as we know, taxes are a powerful tool to help create thriving communities. How communities raise money through taxes and solve problems together through public budgets can really fuel economic opportunity for everyone or hold folks back, as we've heard Vincent say. And taxes and tax policy aren't interesting, right? We typically don't ever think of taxes as definitely not sexy, although at CFI we think they are. But we don't always make the direct link between taxes as playing a role in addressing health disparities and addressing issues of housing and homelessness or criminal justice or environmental justice, issues with immigration. For us at CFI, tax policy is foundational to all these issues. Being able to address these issues is totally connected with how we raise money together through taxes and how we direct those dollars and who gets taxed and how much they get taxed. And all that really helps to ensure that, as Vincent was saying, that we have healthy state budgets to build affordable housing, to fund schools so that we have, smaller classrooms and the kiddos can focus, so that we have well-paid teachers. It means addressing the pressing climate issues of our day, right? And so this is, for CFI, tax policy is really at the heart of addressing so many issues, and especially if folks are familiar with the state of Colorado, especially in addressing the issues we see in our state with we have some of the most restrictive tax laws in the state. So it's we often find ourselves in Colorado in this conundrum, right? This paradox of a really strong state that, prior to the pandemic was growing really quickly, had one of the best economies in the country, and yet we have ranked as one of the lowest in terms of teacher pay. We have huge issue of homelessness, criminal justice issues in the state. And so for CFI tax policy, we can't care about addressing any of these issues if we don't care about tax policy. And as you said, I came to CFI as a State Priorities Partnership Fellow, which is a network of about 40 states across the nation of organizations doing tax and budget research and policy advocacy. And this network is convened by the Center on Budget and Policy Priorities, which is our national partner and national think tank if folks are familiar, doing this work at both the national level and supporting states through their work. And the center has a 2-year fellowship, which is how I learned and came to fall in love with tax policy. So started that journey in 2017 and was a fellow for CFI for those 2 years. And they liked me enough to keep me, and so have stuck around and have been able throughout this time to serve through different roles. As an analyst, as a coordinator of our legislative work, and most recently this year through the deputy director position. So really has been awesome. You know, for me as a social worker, as a woman of color, as a daughter of immigrants, I really fell in love with policy work because it's all about changing the systems that cause a lot of the issues that we experience at people at the as individuals and at the community level. I fell in love with tax policy and realized that that is also an area that we as social workers can make huge changes in and that we're needed in. Because I don't think that you can care, as I said, about social justice, about racial justice, economic justice, if you don't care about tax and budget policy. So it's a little bit about me and what I do at CFI and how we do this work.
Great, thank you, Esther. Our next panelist is Dylan Belisle, who's going to speak a bit about research and how research practice can inform tax policy. Dylan is a postdoctoral research with the Project for Middle Class Renewal at the University of Illinois at Urbana-Champaign. Dylan is a former community organizer who holds a master's in social work degree from the University of Illinois at Chicago, and then earned a PhD at the University of Chicago. Dylan studies poverty and social policy, and his doctoral dissertation focused on issues pertaining to the earned income tax credit. So Dylan, I'll hand it over to you now.
Great, thanks, Jenny. Yeah, so thank you for having me here, and I look forward to being in conversation with others and sharing more about myself and my work and so forth. But I wanted to kind of just share a little bit about how I came to this work. So as kind of already discussed, I mean, most of us do interact with the tax system in many different ways. And I think for myself, having both positive and negative experiences growing up with particularly the income tax system, both benefiting from the various tax credits that we've already sort of discussed, like the child tax credit and the earned income tax credit, but also, family having some challenges, and, God forbid, you have an audit, right? And sort of the challenges that arise from that. So, and that really motivated me in my work post MSW, really interested in kind of having a critical perspective as a social worker. I think that we really bring a perspective to focus on how programs are working or not, particularly for families that are often not at the table in deciding how these policies should look, how, what's a good way to navigate these policies, how they should be structured and so forth. So one of my first opportunities post MSW was I worked with a VITA program, of a volunteer income tax assistance program in Chicago. And they actually did a really cool study looking at a periodic payment of the earned income tax credit. So somewhat similar actually to what we experienced last year with monthly payments of the child tax credit. We did quarterly payments of the earned income tax credit to examine both the utility, how, to what extent did families like this, did they benefit from it, and to what extent was this administratively feasible as well. So thinking about folks being able to understand what's happening, actually get the payments and so forth. So, and I was actually having a conversation with a colleague who was involved in this work recently, and we were kind of laughing a little bit because at the time, this was back in 2014, 2015, there's a lot of skepticism, like people saying, oh, people don't want their payments during the year. And now like everyone's, pushing really hard for the child tax credit. So it kind of speaks to, benefits of doing research, of being involved in this, and particularly social workers bringing a lens to how these policies can impact the communities that they work with, right? And so now, my work has continued to kind of look at that. As Jenny had mentioned, I work with the Project for Middle Class Renewal, and we really are focusing on working conditions for workers across the state of Illinois, also in the Midwest, and really on focusing on elevating issues that are affecting workers. And we, do a lot of research across different industries and so forth. But I was really brought on to sort of elevate our research into tax policy, both in looking at the impact of, say, state EITC credits, child tax credits. But we're also, to get a little bit to what Vincent was talking about, thinking about the upper end of the distribution, right? And so we're also looking into the estate tax, which across the nation has been, at least at the state level, has been, well, even at the federal level too, has just been increasingly sort of chipped away at. What happens in that, often more lower income and middle class families then need to make up that difference, right? And so in Illinois, we have one of the most regressive tax systems in the nation as well. One aspect of that is because we have a flat income tax. So unlike the federal system where, as Vincent was talking about, as your income increases, your tax rate increases, in Illinois, that's not the case. I believe right now it's just under 4%. So regardless if you are a millionaire or you have, you're paying, you get paid minimum wage, you pay the same percentage of your income in taxes. And then of course, all the other taxes like sales tax and so forth doesn't depend on your income, right? And so that's something that we're paying attention to. Again, as Vincent had talked about as well, and Esther mentioned, is that taxes are important for revenue. And so if we're looking at the different types of services that we would hope that we would want our states to deliver and to offer, we need to make sure that we have a strong tax base. And so just to kind of go back to a little bit also in terms of my work on more of the income tax side, really been focusing a lot on sort of the different challenges that families can encounter when attempting to claim their earned income tax credit, their child tax credit, and so forth. Again, having this sort of critical social work perspective that I think as a policy, these are great policies, but we also need to make sure that families are actually able to access them, right? And so to what extent are they sort of have the knowledge of the different ways that that they could claim different family members? Most of the time we're talking about children. If we're thinking about multi-generational households, if how do families navigate that? So these are questions that I think about when things get a little bit more complicated. And I think these are families often that social workers are interacting with, right? Even beyond that, the different documentation that you may need. You need a social security card, or you need an ITIN, you need ID. In the, like I said, and God forbid you're pulled for an IRS review, you have to provide a lot of different documentation. And I think this is where, especially for the families that social workers work with, they need to, if they're claiming children, they're going to have to track down tons of different documents to prove that their children are their children, right? And so this was, these were things that I saw in my work at the VITA program, were just kind of the challenges of understanding both like what the IRS is asking for and how to prove that your child is your child, that they live with you, and so forth. So So this is another aspect of where I think, especially social workers, both in terms of research, but also in terms of practice, really have a place to sort of contribute to, given our sort of focus and so forth. So I'll leave it there. I know we'll have a great conversation and so forth, and look forward to talking more about this.
Great, thank you, Dylan. Unfortunately, our third panelist was not able to join us today. We were hoping that Edith Ford from MAC Development and the a group working on property tax justice issues in Detroit would be able to join us, but she had something come up and is not able to be with us today. But we do have Laura and Trina and Vincent. We have a number of social workers who are interested in tax policy and follow these issues. So as your bandwidth permits you, it's great to see your faces here. We would be happy to entertain questions in the chat from social workers in the audience, things you would like to hear us discuss. But I think I will lead off by asking a bit more about what practice looks like on a day-to-day basis. Dylan, you talked a bit about some of the issues that come up at VITA sites, but I'd love to maybe hear what do social workers do within this program. And Esther, I'm also curious about some of the specific projects that you all work on at CFI. I know you do a lot of outreach and you have a training program and things like that. So what does day-to-day practice look like? Maybe Esther could start off.
Yeah, absolutely. Well, it's very dependent on the time of year. So we are currently busy during the legislative session. So Colorado, as many states, has an annual legislative session that runs January through May. And so right now we are busy running our legislative priorities, supporting a lot of our partners and doing coalition work. Much, if not most, of CFI's policy advocacy work is done through coalitions. And I'll just say that for CFI, you know, as we learn internally and grow in our understanding of what it means to center equity, especially race equity in our work, we find that the best way to be a partner is to be at the service of our grassroots partners and supporting their legislative agendas, because they work directly with community members. And so a lot of what we do is research and data and supporting our partners in that way. And then moving our own legislative policies. And so, for instance, as Dylan, you know, was talking about the VITA sites and the EATC and CTC, we made some huge gains just last year in Colorado, becoming one of the first states in the nation to expand these credits at the state level to ITIN filers, for instance. So folks who file the tax return who don't have a social security number. And that was all done in coalition. So, you know, speaking with legislators, working with community members, we worked with our partners who have parent ambassadors who receive these credits and made sure that they were part of the legislative process and were able to testify and understand what they were talking about. And this year, in addition to this session, in the you know, it's tax season, as we all know, and we're here, working with our VITA sites. And, you know, while folks get their taxes done, CFI is there to talk to them about tax policy so that they can tie it together and be able to, you know, to say, you just got the CTC and that's awesome. Can we talk to you about how you can engage not only in being a recipient, but being an advocate for these tax policies? And so that's kind of where we are right now. Doing, you know, education on tax policy and tax credits, also trying to, you know, be as present and available as we can for partner needs, and then trying to, you know, answer to any testimony or research needs as the session goes on. So that's typically during this time what you can find us doing.
Great. And thanks for underscoring the seasonality of the work here. Trina, did you have something?
Yeah, Esther, if I can ask a follow-up question, at least here in Michigan, and I assume it was also in Colorado, when some of the stimulus checks were coming through and the child tax credits were coming through, they were really pushing community-based organizations to reach out to low to moderate income families that hadn't been filing taxes because they wouldn't be in the system. What sort of outreach were you able to, or help organizations do? And Dylan, you can answer this question too, but to make sure that people don't get left out when these progressive and wonderful policies do get passed.
Yeah, absolutely. That's been a huge part of what we've been doing this year too. So CFI has kind of served as this bridge, if you will, of connecting our local partners, especially a lot of our rural partners who know of CFI. We're not tax preparers ourselves, and we do more of this policy work. So we've been able to connect them to VITA sites. We've been able to connect them. So Tax Help Colorado is a big program here who runs VITA sites. We've been able to connect them to the Colorado Department of Public Health and Environment, who runs the outreach side, and getting some of those local nonprofits connected with CDPHE to get grants so that they can do outreach, so that they can host, a lot of partners have hosted fairs so that folks can get their taxes done for free. So hosting a lot of events and kind of serving as this bridge of connecting, especially our local and rural partners to sources, whether that's funding or VITA sites so folks can get their taxes done for free. And the big issue that we have encountered, as I'm sure Dylan can speak more to, is just a lot of folks needing to get their ITINs. So either file for a new ITIN or renew their ITIN. So trying to connect sources, folks with resources so that immigrant communities can get ITIN so they can get these tax credits.
Great. We've had a question come in from Alex. The Greek names are killing me today. Haralampidis, I apologize for that, from Rutgers University. Alex is a doctoral candidate there and asks, have any of you encountered taxes or tax credits in states that are particularly interesting? So Esther's example of Colorado extending, was it the child tax credit or that the state EITC? Both to ITIN filers, to immigrants who aren't able to claim it under the federal policy is one example. Alex here gives an example of the non-custodial parent EITC in New York, which is an example of tax policy working towards social justice. It's for parents who are paying child support but don't have custody for their kids. It's a way for low-income workers in those situations still to have some tax credit that acknowledges their role as parents and the financial burden that they have. Any other state examples come to mind?
So Illinois just followed. So we just expanded also the EITC to ITIN filers, also to young adults. So there was a 1-year expansion in the federal EITC for young adults between the ages of 19 to 24, but it's just a 1 year. But Illinois made that permanent. And also there was also the same thing for individuals above this age of 65. It's really fascinating to me, like how we have excluded these different age groups just because of age. That could be a whole other conversation. But I also know that California does some interesting things as well with their EITC. But I do think that Alex is kind of getting to an interesting question that gets to a little bit of what Trina had mentioned in the chat as well, about kind of challenges where, say, parents, like a mom and then a non-custodial father, both claiming the same child. And so that's one thing that I've sort of thought about, of like, to what extent, and I've seen this in my own work, of how, parents will talk about how they're sort of, swap the child, year after year, but to what extent can our tax policy be a little bit more flexible, recognizing that, families may be, parents may not be living together. So this, having these different tax policies that recognize that and actually provide a sort of tax break for a non-custodial parent would seem like something that social workers should, sort of think about and maybe advocate for and so forth, instead of just having a policy that's very strict about that. And then having more of that flexibility, which could get around, not necessarily get around, but address some of these challenges when, you have two parents claim the same child, and then it's going to be a whole long process with the IRS of like figuring out who can actually claim the child. And that takes many, many months. And then the families are kind of left without any of that, especially if they need it. So that's what I can add to that. Yeah.
Yeah, and Trina just noted, that it can become very punitive if you end up getting legal claims or tax penalties against people, which really can have what I would think of as a chilling effect for people just trying to work with the tax system in a way that fits their family's reality rather than making their family fit the tax system's implied ideas. Laura, you've got something to say here. Unmute, please.
I have to keep remembering that. I just noticed that there was an earlier question in the chat function asking what type of data research and collection are speakers referring to? And I think it's really interesting looking at the ways in which data itself is an important asset and value for community organizations. And I was wondering if any of our panelists could talk a little bit about what kind of data they find their partner organizations need or community organizations need access to, and how that helps them be more active and more proactive on issues of taxes.
I think Esther could have a really good answer to this, but I think one thing that I've seen in Illinois, and this probably is similar, that, especially at a state level, if you're doing advocacy on something like I guess anything, they like to have data by state legislative districts, right? But there can be challenges sometimes to get that type of data. And then the depth of that data as well. So if we're talking about the EITC or taxes, there is some data for that, but kind of the depth of that data is just numbers, like, number of people who get it. So there are some challenges of kind of having, breakdowns by race and gender, income, and so forth, which is sometimes also questions that partners have had as well. But yeah, I'm really interested in what you all are doing in Colorado.
Yeah, it's very dependent on the issue. So as Dylan said, a lot of the data, for instance, with the ATC and CTC is the impact on a legislator's specific district. So how many folks in their district get the credit, average amount of the credit. So we created district fact sheets for all of the legislators last year, for instance. We focus a lot on the economic impact and how good it is, especially for local economies, of folks having money directly in their hands, because as consumer expenditure surveys show, for instance, that how much money folks spend in the local economy really differs between income groups. So we find that a lot of folks who earn low and moderate incomes are actually the ones spending most of that income in their local economy. So they're the ones going to the locally owned businesses instead, as opposed to someone who makes a much higher income who invests it in stocks or in savings, which doesn't move the economy the same way. So we often find ourselves having to make those economic arguments. Really at the foundation of that is this framework of a people-centered economy. So when you focus on centering people in your policies, it's better for the economy. To give another example, we do a lot of cost-benefit analyses. So the cost to families and communities and the economy when we don't have policies that support immigrants, how much it costs the state when we are not funding solutions for air pollution or water filled with lead, and how that's impacting communities and impacting the economy as well when people have like high healthcare bills. That means that they don't have money to, again, to take care of themselves, and the impact on that on the economy. So a lot of looking of, you know, this big picture of how is it impacting families, individuals, and then the economy. So a lot of different data, a lot of cost benefit analysis.
Mhm. Great, thank you, Esther. And I know the importance of giving congressional district level information. That's been a strategy, I think, that's been used with the child tax credit too, which is a national issue that coalitions, including the national NASW, are working on to try to restore or make permanent the temporary expansions. So we've had another question come in about revisiting where Vincent got cut off, about thinking about the disproportionate burden of sales tax and other consumption taxes here, and how that matters for low-income families. So Vincent, I don't know, do you think you have audio again? You want to try it? If not, I'll try to jump in. Yes.
Okay, there's a good chance this will drop out again, so apologies for that. Yep, I'm getting a message that my connection's unstable. I'm so sorry. But I'll give it a go here. Yeah, you know, it's just a really important thing to think about, because it's, you know, it's not a big part of the policy discussion, but how do we relieve some of those burdens in states that rely on sales tax as one of their major sources of revenue? So like, Jenny, maybe you actually can speak to this, but didn't Washington State adopt an earned income tax credit, even though they don't have an income tax, basically to offset the paying of sales tax? Is that right?
Yes. Yeah. So what Washington State, I can talk a bit about the disproportionality that arises with the property tax as well. So, or with the sales tax. And as a parent of children who are just exiting the diaper stage, the example I like to use is diapers, which are a pretty essential good. They are not a luxury good. They are not something that people buy and frivolously go through. But in Washington State, they're subject to our state income tax, as is any non-food item, which means if I buy a $10 package of diapers, I end up paying $11, and $1 of that goes into the state tax fund. So for low-income families who spend most of their income on essentials, they're paying close to 7, 8, even 10% of their income on state taxes, whether it's their the incidence of property taxes on them, and also the incidence of sales taxes. So Washington State, despite being the state that has both Jeff Bezos and Bill Gates as state residents, does not tax income, does not tax wealth, but does tax diapers. So because we don't have a property tax, or because we don't have a sales tax, it has not, there's no clear way for the state to have a progressive redistribution, such as with other states that do an earned income tax. We are in the process of trying to implement what we're calling the working families tax credit, which would be a distribution, a tax rebate, as it were, to low-income workers, but it's requiring our state to build a new system to deliver that. So much as the federal IRS ended up having to take on the additional challenge of delivering the child tax credit to households that aren't normally filing federal taxes, the Washington State Department of Revenue and Department of Commerce are having to figure out how to deliver a tax credit to individual households. Back to the issue of what does practice look like on this. Part of what I've done is had a conversation with somebody who was working on that for a while, and I'm planning to attend some of the listening sessions to think about the assumptions that they're building into that. And I know our grassroots partners in Washington State at our statewide poverty action network, which is a grassroots organizing group that has several of our School of Social Work alums working for it. They're doing some work to weigh in on that as well. So, all right.
The other thing to think about with the disproportionate burden is you think about states that rely a lot on sales tax for revenue. A lot of those are in the South, and so just through geography, you start to see things like, what states rely on consumption taxes intersecting with things like racial economic disadvantage.
Yeah. Another issue in the federal tax system is the extent to which we tax income, but don't tax wealth. Trina, you have some thoughts on that? Because by allowing wealth to be largely untaxed, we're really contributing to economic inequality.
Well, yeah, just because for most Americans, the only income they have is through their job, so through their salary, and there's a whole system of automatically taking those taxes out, right? With wealth, not only do they tend not to be taxed, but even if there is some sort of a sale, so you have some sort of realized return, it's at a lower rate than income often. And then for those who've been following this proposal that I guess Biden has made about a billionaire tax, the idea is it's written in our Constitution, you're not supposed to tax assets. I'm not sure if that is a good thing to reify, but if that is the case, then people can have their wealth grow and build and become more valuable over time, and they just pass it on to their children and never have to pay taxes on it. And even if there were some set estate tax or so-called death tax, it's really hard to evaluate some things. So what's the value of the business? What's the value of this piece of art? What's the value? And there's a very limited number of people who can make those kind of assessments because we don't do it very much, and it's not a whole system like we have for income. So is that fair? Is that good? Do we want those at the top to keep getting more and more and more? That's the direction we're going. Some people say that it would lead us to, even though we started out as being kind of democratic and everyone's supposed to be the same, having more of an aristocracy where some families have money and they just pass it on from generation to generation. Is that what we want? Is that going to happen by default? And then the one other point I want to make on that, we have policies that are supposed to try to prop up home ownership and retirement savings. But again, those are often taken advantage of by those at the top who itemize or who have additional money to put towards retirement accounts. And then those at the bottom are left out. So it's just all these things that we do give tax breaks to seem to help those at the top and seem to either leave out or disadvantage those at the bottom. And so if we really do want to support things like retirement accounts, long-term savings, home ownership, or even just stable housing, affordable, stable housing, how can we use the tax code in a way that benefits those at the bottom and not just those at the top? I'll stop there.
Great. I think I'm going to share my screen again and go to another quiz question that Aaliyah will put up as a poll. I'm curious, for those of you who are with us in the audience, how much have you thought about inequalities? Oh, next poll question, please, Aaliyah.
Sorry about that.
Yeah, sorry about that. I skipped one.
Okay.
How much have you heard about the inequities of tax policies before this? Has this been something that you're thinking about a lot, a little, or not at all? And then next, I'm going to ask our panelists for advice for people who want to be thinking about this or acting on it more. So, all right. So we've got some folks who are thinking a lot about policy taxes, a few who are thinking a little, and a small minority of not at all. For social workers who want to be doing more work on tax policy or just getting ready and thinking more about tax policy, what advice would you all have for learning about the issues or getting more engaged? Sorry, I didn't mean to take my video off there.
If I can ask a question of Dylan and Esther, if someone doesn't want to do this all the time, but just wants to help volunteer at a VITA site during tax season, is that a hard thing to do? Is it a lot of training? Just kind of what would be an easy way to get involved in that way?
I can only speak to what we have here in Chicago. Like there are, it's not a hard and fast requirement, but they do want folks to, I think, volunteer at least once a month, I believe. And so those sessions tend to be like 4 hours. The training, I think it just really depends. If you've filed your own taxes in the past, you probably are in a pretty good position. And there's different levels as well. There's sort of like a basic level and advanced level. They provide training and so forth. I would say the training at max would maybe be 10 hours, 15 hours. But I do think it's useful training, even if, just to kind of know the ins and outs of these things and to learn more about it. Yeah, I think it's, it is a great way to kind of get, if that's sort of the place in terms of the tax system that you have interest, to kind of get your feet wet and learn a little bit, and then, do something that I think is somewhat in line with, what social workers do. Some social workers do. So, yeah. That's what we have in Illinois. Yeah.
Yeah, I'd say for Colorado, we're pretty unique in that voters actually are the final decision makers in most tax policies. So we see almost every year something on the ballot in terms of taxes. So I think the biggest thing, in addition to wanting to volunteer with VITA sites, is just getting educated and talking to your community about why tax policy matters. Because as we know, it's not something that's taught, and in my opinion, intentionally. Why would you teach folks about tax policy when it plays such a critical role in historically in maintaining wealth in the hands of just a few? And so just educating yourself, get connected with the Colorado Fiscal Institute. We have a program called the Tax Ambassador Program that we host. It's a 6-week train the trainer course where we do a deep dive into Colorado tax and budget policy. It's a one-on-one course open to anyone and everyone. And then we just, the course ends with an opportunity for folks to practice, a presentation of any sort to a community of their choice. And so, yeah, just get involved, getting educated and talking to other folks. I think that tax policy, I think that's the role that we serve as social workers, is just getting involved ourselves into this work. We're critically needed in policy advocacy spaces.
Thank you, Esther. And the Tax Ambassador Program that you all run, I think, is a great example of things that we can do that could be replicated in other states, training people to talk about these issues and to recognize. And I see some chat in the discussion in the chat about Caitlin says, I want to incorporate this into my 101 class on social welfare. Wonderful. That made my day. And then Alex commented with a suggestion from a book reading about how the EITC matters in people's lives. We had another question in the chat, and then I think we need to have concluding thoughts. C. Stevens had the question about wanting to know what we think about low-income Americans mostly benefiting from tax programs, but not largely contributing to, yet supporting taxing intergenerational wealth. It seems like there are actually two different issues there. One is, how would you all respond to the statement that people are benefiting without contributing, and then what should be our expectation around that for wealth? Anyone want to take that on?
I can take the first part. I mean, there was that infamous comment that was made a few years ago about, the 47% who don't pay taxes, or the takers, and, the makers are losing out in our system. But That's only true if we're thinking exclusively about the income tax. If we start to take all these other taxes into account, like if you're a worker in the United States, you're probably paying payroll taxes, even if you're not making enough to owe income taxes, right? So, you know, if you're living in a sales tax state, you're paying sales tax. So there's all these other kinds of taxes that folks are contributing to, but the one we normally think of when we think of taxes is the income tax. So I think it's really a question of just thinking more holistically, because almost everybody's contributing in some way.
Yeah, you can't, any renter or homeowner is contributing property tax, whether directly or indirectly, for sure. Okay, we're almost.
May I add
yeah,
a bit to that? Is that okay, Jenny?
yes,
I know we're up on time. I just wanted to add that, you know, with tax policy, taxes are so tied to values. If you look at like just how the words that we use, the dog whistles that we use around tax policy to really create this narrative of, you know, it falls all into this, like, you know, the trickle down economics, pick yourself up by your bootstraps. When if you take a look at the history of tax policy, and I'll link the paper in the chat in just a moment, we've gotten a lot of great research and work from our national partners, the Center on Budget. Tax policy has a long and racist history. The sales tax came out of southern states. The first modern sales tax came from Mississippi, which instituted it as a way to raise revenue for the states, and as a way to raise revenue and move, you know, lower property taxes for predominantly white property owners, who were the only folks for the longest time who were able to have access to owning property. And that was prior to, you know, the federal government had just started taxing income. And so white property owners were the only folks who had property. Their property is getting taxed. They are now having, you know, if they have income at the federal level, their income is getting taxed. And they didn't want, if folks are familiar with local property tax dollars, they're one of the biggest other source of funding for public schools. They didn't want public school, their dollars to be going to fund public schools that were now becoming accessible to Black children. And so as a way to lower their property taxes, they still needed revenue for the state. They were looking for other things to tax. And the only other thing that Black folks had to tax was the tangible goods that they bought, because they didn't really own property. They didn't have good paying jobs, if any. And so we see the rise of the modern sales tax. And so, big, long story and long-winded, but really, you know, tax policy isn't just about the numbers and the data and the research. It's about understanding history and how we've used tax policy and weaponized it as a way really to, you know, this move from taxing income to taxing wealth isn't new. We've been doing it for a while, and it's a big reason why we see the disparities amongst, you know, different income groups. In the state of Colorado, Black and Latinx filers pay the highest percentage of their income in state and local taxes than do white Coloradans, who make up the majority of folks who earn the highest incomes. And so it's really, you know, of understanding the values pieces that we've placed around tax policy, and that how all of that has come together to shape how we feel and see taxes today. You know, we see tax credits that support low-income families as being a handout. And yet the tax code is rigged with a lot of tax credits and deductions that help the wealthiest taxpayers lower their tax liability almost down to zero. And yet we don't call those the handouts. And so I think it's also about challenging the narratives that we've grown up believing, whether you're white or a person of color, and what you've internalized as well.
Yeah, there are a lot of ways. Thank you, Esther. And there are some things coming in the chat as well. There are a lot of ways that our tax system reflects our larger racialized structures of power here. Dylan, you wanted to say something, and then
and then we'll be just real quick too. So just kind of on the top end of it, thinking about it too, that we do tax a lot of different types of property. For example, we pay registration for our vehicles, right? And this is an ongoing tax. So I think there's also ways in which that we can think about the equity of taxing assets. yeah, it's maybe not necessarily an asset tax, but and then if you think about, middle class families, homeowners paying, a tax on their largest asset, their homes. And so I think there's a case to be made to tax other forms of assets, which the extremely wealthy are not in their homes. It's in, stocks, bonds, ownership of, businesses and so forth. And so I think that's another case to be made. And then kind of piggybacking off of Esther, thinking how this is stratified by race as well, that, our tax system is actually, in many ways already taxing low-income families, families of color disproportionately across the board, right? And so I think that's another frame to think about the various types, even if we don't call it a tax, a registration on a car, it is a tax, right? It's a source of revenue. And so I think that's just another thing that we can kind of add to that.
Exactly. That's a good point. I often overlook those fees, but any fee generation is in some ways a tax. All right, we're going to our final question now. And we're curious whether you've learned something new today or have something new to put into your toolkit. They don't allow panelists to vote here, but I certainly did, and I appreciate the contributions of the other folks here with me today. All right. Whoa, 100%. That seems like great inflation, but I will take it. Thank you all for joining us today, whether you're out in our audience or with us today. We will be recording this, as I noted, and posting it on the Grand Challenges site. It'll probably take us a couple of weeks to get it up there. But for those of you who are teaching and are interested in using this as an educational resource, remember you could use any one clip of this or the whole darn thing if you'd like. And finally, just on behalf of our Grand Challenge group here today, thank you so much for joining us. There are ways you can get in touch here on the slide via Twitter or following the overall social work Grand Challenges effort. So thank you all so much for joining us. Thanks again to the University of Michigan for hosting us and for offering the CEUs. And happy tax day to all. All right, thank you.